Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. More small and medium-sized businesses are being knocked back for loans due to tax debt as the ATO cracks down on SMEs that owe money. The Banjo SME Business Barometer is being released today, and Fear and Greed got an early look at the report. It reveals the state of Australian small businesses. The barometer, released quarterly by non-bank lender Banjo Loans, also reveals that arrears management is under control for all industries with one key exception, retail. It's interesting to go through this data because the post-COVID world has certainly hit that small and medium-sized business space. The number of companies appointing administrators hit a record high in March, for example. It was about 1,100. That's the first time since 2015 that insolvencies rose above 1,000 in a single month. Guy Callaghan is the CEO of Banjo Loans. Guy, welcome to Fear and Greed.
Thanks, Sean. It's great to be here.
What's the main message from your index, from the barometer?
Oh, there's a few really, but the main message I really think is that SME businesses have been doing it tough for quite a while now. So, COVID came along and then we sort of had a bit of a bounce there back in 22, and then 23 has been a really tough year for them. And they're still doing that pretty tough. And we just watch it pretty warily on where the businesses are going. We look at our data all the time, obviously, and then release this report once a quarter. And it's just really interesting seeing which industries are doing well, which states are doing well. Your point around the ATO debt is something that is the ATO being pretty fierce on calling back debt at the moment. So the businesses come to us with looking for a loan and they have ATO debt. We're a little bit wary on it and just make sure that they're well set up with their income or well set up with their payment with the ATO.
Do small businesses kind of use the ATO as a bank, for want of a better term, or a non-bank for that matter, but the idea that if they've got tax to pay, they kind of just sort of, well, obviously they're not paying it, but is it a mindset thing? Why aren't they paying it?
Yeah, you've hit the nail on the head there. They, particularly during COVID, they really used it as a quasi-bank really, where let's just hold out on paying the ATO because the ATO was being soft on government directions to help businesses during that really, really tough time. And that continued, and some of the businesses let that get a little bit higher than it should have, which then became a scary prospect to start to get under control. So that relaxed nature of the business owner could be now coming back to bite them because the ATO was soft, but now it's really coming back, and they need to stop using the ATO as their bank.
Okay, so what are the areas that you, as a lender, Banjo Loans as a lender, are seeing kind of struggling more? Which sectors are doing okay? You mentioned that you've data on geographies and that too. I kind of want to get a feel for it, where construction sits, where retail sits, etc.
Yeah, look, it's really wide and varied. The services industry and health and pharmaceutical type industry are going really, really well. So healthcare, social assistance, that side of things. Services, as we know, are going well, and they're still quite inflated with their prices at the moment because everybody's still paying them. The ones that are really struggling are retail and hospitality, particularly, mainly because the consumer's been really hurt during this time with inflation, rising interest rates, so that they're starting to really tighten their belt, which is now having a pretty strong flow-on effect to the retail industry. Manufacturing has also started to take a slowdown of late. The ones that has surprised us until now is construction. And it's not to say there's not businesses out there that are hurting, because we've all seen it in the news. But things like the Victorian, the government initiatives on infrastructure really helped a lot of construction business this year. So that they were going okay, but we are seeing a slowdown in that as well now. So yeah, it's really mixed across different industries. The states, what we've seen recently is a real slowdown in Victoria and New South Wales, which is not great considering they're our two largest states economies in Australia, and they really drive the whole economy. Queensland and WA until now have been going okay. And I think the thing that's driving that mainly is, that they're rural based, they're mining based, so they're really looking at investing in asset finance type products to get them going. So we're still seeing a lot of inflow from there. But they're not much in the business line sets of things.
Stay with me, Guy. We'll be back in a minute. I'm speaking to Guy Callaghan, Chief Executive Officer of Banjo Loans. What about how businesses are managing their money? Now, obviously, if they've got an ATO debt, that's something that they will have to repay, but SMEs often live and die on cash flow. Are you seeing them managing their cash flow okay, given the time of the economic cycle, and particularly when they're coming to you for a loan?
Yeah. So what was, and this I might take a look, we release an annual report, the SME Compass, where we survey over 1,000 Australian SMEs, and that came out about a month and a bit ago. So I'll use a bit of data from that as well. But what we saw towards the end of last year, and particularly the first few months this year, was a spike in less than 30-day arrears, which means people were really managing their cash flow that well. They were caught out a bit. They thought revenue flows were still going to flow, and then the higher interest rates sort of started to bite them, and they were caught out a bit. Since that time, we've really, in probably the last 3 months, so the last quarter, we've really seen a shift in businesses being on top of their cash flow, and therefore their loan repayments and that side of things.
A shift in a positive manner?
A positive manner for us, yeah. Positive manner for being able to manage their arrears us manage the arrears and them manage their actual repayment time frame and frequency. And I think it's just becoming more of a normal market setup in their own mindset. And so that the craziness, like you think of the retail guys when the retail industry with COVID, they were gangbusters, and so manufacturing, and all this revenue was flowing in, and then just because of online sales, and now that's slowed down and everybody's starting to hurt, so they got caught out a little bit with managing their repayments, but now they seem to have that back into control as they've got used to the new real. What we have noticed they're doing, and this came out of our SME Compass survey, is in 2023 was kind of a year, or 2022, 23 was a year of increasing prices as inflation went about. Now, over the last sort of 6 to 8 months, they've really focused on decreasing their cost base. So what can we do to save money? What can we do to be more efficient rather than trying to increase the prices? Because we know the consumers aren't going to pay more now. So it's been a mental shift and a bit of a change and shift in the way they actually deal with the new reality they're living in.
Are they still asking for as much money as they were previously?
Yeah, they are. So I'm still seeing the applications up. So the Banjo Barometer, the quarterly data what it showed was, even though, historically the last quarter we have is usually the softest in application data that we get throughout the year, the third quarter of the financial year. However, what we saw was it was still the softest of the quarters. However, it was up about 28-30% from the year before. So they're still asking for money, and the good businesses now that are knowing how to manage their money well are the ones that are coming, because I think what's happening is they understand now that there won't be any more rate rises. So there's a little bit of feeling of contentment of where the market's at, and that they know where things are going. Whereas, all of last year, all we got was rate rises in a row, and it scared them. So now the new businesses, the strong businesses that are planning well can actually start to plan for the future and how they're doing things. So we're still seeing really, really good volumes in loan applications.
Okay, so the takeaway for a small business owner listening to this, if they're going to Banjo Loans, make sure you've got you want a loan, make sure you've got your tax paid, or at least have a payment plan. And I presume, what else do they need? Make sure cash flow is all right so that they can repay.
Yeah, look, essentially. So we want to see if there is ATO debt that is under a plan, or they have they're engaged with the ATO. You want to see that their forecast, we also look at a bit of their forecast where necessary for those larger loans, to see what they're doing in there with where their client, where their revenue is coming from. And their debtors and creditors obviously under control. So if we can see good cash flow management within the business, then we're happy to start looking at lending them money too. If their finances and everything's all over the place, then you're really pushing things to try and get a loan from anyone. And the banks have got harder and harder. So the non-bank lending sector where we play is probably the area where they are going to get some joy, but we also want to see them being in a really strong cash flow management position.
Guy, thank you for talking to Fear and Greed.
No problem. Thanks a lot, Sean.
That was Guy Callaghan, CEO of Banjo Loans. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.